Hemang Jani as well, who's joining in on the show. Hi there, Hemang. Let's start off by getting in your take on the mid-cap IT space in particular. Given that now, for example, for Coforge, you've got the stake sale by barring PE really removing a key overhang. Do you think that we should now start focusing on the positives like deal wins, industry-leading growth, etc. for mid-cap IT? And what's your, where is it that your preference lies?
Morning. Midcap IT has been doing reasonably well, though it's been a bit of a stock-specific move, and we've seen good, strong performance come through from Persistent System, Coforge, KPIT, Emphasis. These stocks have done reasonably well, and even the quarterly numbers, some of these companies have delivered, a good, solid performance with a good growth outlook as well. What we must bear in mind is that yesterday US markets gave up in a major way, and Nvidia, though they delivered exceptionally good growth and much better outlook, the fact of the matter is that the stock was down from the high almost about 5 to 6%. So short term there is going to be an overhang of what really happens in US market. So I would, feel that one should really wait for a bit of a clarity and stability in the stocks before you really start getting into some of these mid-cap IT names.
That's going to be the other one which is in focus. Of course, the stock has done pretty well year to date. But remember, Anfin is looking to sell a 3.6% stake amounting to about 2.275 crore shares, that is, in the market. Hemang, in the near term, some of these promoter exit or PE exits, what are they likely to do? Case in point being Paytm on the stock price, and how should minority shareholders be reading into this news?
There are two aspects to this. One is that once you have series of block deals, it takes away the liquidity from the market, and which is not great news given the fact that markets are already struggling, and if a sizable liquidity is sucked out, it will have some negative implications. Other thing is that you have to take a stock specific view. Case in point being that Coforge, they offered almost about 7% of the equity at a discount, and we all saw what really happened. So I think it all depends upon what kind of buying interest is there, and how soon that block gets absorbed in the system. So I think given the overall structure of the market, it would make more sense to kind of stay away from having large commitments and take a stock specific view basis the level at which one is comfortable entering into.
Will you be very selective within this space, as we have seen now a lot of focus on profitability improving?
So, Aman, what we've seen is that Paytm as well as Zomato, maybe Nykaa hasn't really done so well. PB Fintech also has kind of bounced back. I think from the lows, these new age tech companies have seen upside of almost about 30-40%, but it's quite sizable, as the market cap even at this price point is not small. Now, having seen that kind of an up move, the fact of the matter is that Paytm and Zomato continues to deliver better than expected kind of numbers, data points. So one is getting a bit of a comfort in terms of where the company is heading towards in terms of profitability and growth. So that is surely comforting. The only thing is that having seen a big run up, it would make more sense to wait for a 10-15% kind of a dip before buying into it. So I would definitely be positive on names like Zomato as well as Paytm, but would wait for a small dip.
Hemang, you're curious to get in your thoughts on the entire defense and railway sector. Some of these stocks have seen a pretty phenomenal rally over the last 6 months or so. Is all the good news already priced in, or is there more steam to go?
Clearly the theme is very strong, and the good part is that the positive news flow in terms of orders, in terms of the government's focus, continues to remain good, which is surely good. And I think both Bharat Electronics and HAL, I think these are the two names where we have a lot of comfort in terms of the overall growth for next, let's say, 2 to 3 years. And I think given the current geopolitical situation where we have continuous threats coming from China, I think this is going to be a focus area for everyone. So I think BEL and HAL are the two names that we like.
Hemang, what's stalling big banks like HDFC Bank? I mean, the merger is done. The news flow is now positive. It's one combined large entity, but the stock price is just not doing anything.
So, Aisha, a couple of points. One is that though the merger has been positive news for the overall market, the buying, which was likely because of the weight change, is much lower than what the market expected. Maybe less than $1 or $2 billion. Secondly, there are also reports and concerns that on a larger base, it would be far more difficult for the merged entity to deliver a 16, 18, 20% kind of a growth, as we already have seen that the bank is actually struggling to deliver, larger growth on this base. Plus, the integration related issues will have some bearing. Maybe it will take a year or so to really complete that. So I think the market is slightly cautious on that. And at the moment, I think it would make more sense to go with the ICICI Bank or an Axis Bank versus an HDFC Bank, as there the growth visibility is much better.
What is it that you're betting on when it comes to the power sector, and also some of the exuberance which is building on to some very small, illiquid, single digit names within the power sector as well? I mean, not everything can be good out there, right?
I think, Aisha, what we must keep in mind is that the broader market, the mid cap and the small cap, clearly there is a sign of a fatigue, and typically people end up holding on to many of these names which are low quality illiquid names also, and before you realize the stocks are down 10-15%. So I think surely it requires some degree of caution at this point of time. Having said that, talking about the power space, I think the fact of the matter is that within the broader PSU theme, power has also emerged as a sector where people are expecting a good amount of stable growth with additional trigger coming in from reforms. Also, MSCI related, flows were also expected in names like REC, PFC, etc., which have led to some sort of action. So I think NTPC, Power Grid, these are the two names which are a little, sitting ducks, which have really not gone up in a big way. But last 6 to 8 months, they've seen a good amount of action. And given the stable growth and dividend yield that they offer, I think it makes sense to have some exposure to these names.
I wanted to get in your take on the entire hotel and hospitality space. Yesterday, in fact, we were chatting with Rahul Chadda, and he says that he believes that this is a sector that's garnering traction. Just a short while ago, Nick was just talking to you about travel picking up and airports, and just sort of linked to this theme. Is there still promise in picking up names within this space?
Yeah, I think travel and hospitality has done pretty well in the last 1.5 year. And maybe there was a sense that a large part of that positive is already priced in, and what sort of growth on a higher base these companies can deliver. But on the recent, insights which we have got, there is a sense that some of these companies have actually carried out some sort of a expansion, and their hotel room capacity has got added, particularly Indian hotels in Lemon Tree. And given the occupancy levels and the tariff at which they are offering these rooms, there is going to be a decent growth that one can expect for next year also. So I think both Indian hotels and Lemon Tree, I think, are making a lot of sense at this point of time. Services listing and possible disruption or de-rating that can happen, I think a large part of that is over. If you look at the quarterly numbers, Bajaj Finance continues to deliver very healthy growth in the assets and most of the parameters. So I think it may not really outperform in a big way, but for those investors who are looking for a stable, let's say 18-20% kind of a return, I think even at this price point or valuations, it is surely one stock to have. But if it comes to growth, etc., I think I would rather go with some of the other banks. Something like maybe Axis Bank or ICICI Bank would offer you much better growth because the valuation comfort is much higher over there.
options and a Bajaj Finserv as well in this last 1 month has fallen about 11% or so. Thanks very much, Hemang, for joining in and sharing with us your outlook on the markets. 9 bang on the clock. What are the